This is askSlim Live. July 13th, 2021. Information and support for traders and investors in a time of crisis and beyond. I have a little bit of legal to share with you as we begin the show. Everything we share with you at askSlim.com is for entertainment, educational purposes only, not to be construed as investment advice. Everything we do on our website are all written in this show, and any videos that we do on anything that you could possibly use that information should be discussed with your investment advisors. We are doing live events as special support for our members. They're not included in the regular memberships. We just have been bringing them to you for about the last year and a half since COVID started. We started out doing it every week, and then we pulled back to right now every other week. And we have lots of other video specials and things planned for you coming up in the future. They've been created for this time of special needs, and these events are likely to be recorded. This one is being recorded and is likely to be shown publicly. We always act in ways to protect your identity. We never share your identity with any other third parties or market from other third parties. Still, your participation in this event understands that you agree that we cannot completely hold you in being anonymous. So please refer to our terms, conditions, disclaimers, full information at askSlim.com. All right, the whole team is here, all three of us analysts, and hopefully the team to grow pretty soon. We have, I've been trading now for 47 years, since 1974, when I became a member of the CBOE. I'm one of the original cycle traders, and cycle work that you see me doing has evolved over these 40-something years, starting from when I read the book, Profit Magic of Stock Transaction Timing, and then put a whole bunch of other things in there that JM Hurst doesn't have in there. And those things can be learned in our cycle analysis workshop. I'm a passive investment advisor for a swing trading hedge fund, coach. I was a host at askSlim at Tasty Trade, founder and president of askSlim.com. Matt, 20-year technical analyst, protege of mine. I graduated from my coaching program, former managed futures broker. He is COO of askSlim.com. RV, 10 years in the business. He ran Boston College's endowment fund, MBA. And he's a CFA, 7-year mentee of mine, and vice president of business strategy here at askSlim.com. Lead cycle analyst, and certainly the man that takes full charge of our level 3 and level 4 in here when it comes to all the analysis, except for me, which I do almost all of the futures analysis that you see. So we split that up pretty good, and we're all very, very busy maintaining in this business and bringing all the content to you that we bring. Today's agenda for level 1 through 4, I'm going to give you a kind of an expanded market brief, almost like the monologue at the beginning of Market Week, because there's so much to talk about here. Matt's going to bring you an overview of our coming price increases, which are going to affect none of you. But we're going to talk about our new level 4 plus membership. So the price increases are for new people that come on, and a good reason to be considering upgrades if you're going to be considering to do that right now, and that can help you with that. We're going to take an express round in here where we kind of fire back at you with a Q&A, where we look at questions on askSlim services, trade planning, chart analysis, trading issues, anything that you bring to us other than recipes, because I'm not a very good cook. So I'm thinking of doing a video on a recipe on a trade. I've been thinking about that, how to put that together. So
that sounds good.
Pieces together and do it kind of in a cooking show format, which I think is really a good idea. So I've been thinking of making notes on that one recently. So all right, let's get this. You like that, huh?
Yeah, that'd be a lot of fun.
Yeah, okay. All right, let's get this rolling here. Needless to say, the market conditions are unusual. As you saw, the inflation rate reported today at 5.4% year over year, which is a giant rate, 4.5% of the core. That's the highest we've had since 1991. That's 30 years. And yeah, they might have inflation being transitory, but when you look at the responses in the markets to getting those kind of numbers of what's going on in the markets, I really think that this is one of the most unusual times I've ever seen. You have all this inflation, which would normally be a time when you'd see rates spiking and anticipating the Fed tightening like crazy, raising interest rates. But we have yields very weak as the bond market's been really strong. So that would be a normal response, but we don't have that response going on. Also, at a time when yields are weak, you would expect that the dollar would be weak because money would be flowing away from US currency, but it's flowing to the US currency. So we have money moving into bonds, we have money moving into dollar at the same time, which is a little bit on the unusual side. And when we have inflation, you would think gold and silver would be going crazy on the upside, but they're going nowhere right now. Stocks all-time high, but the breadth in the market when the S&P was up this morning and when the Nasdaq was up 100, we had the Russell at that time down significantly, and the breadth was 2-to-1 on the negative side and finished worse than that. So we have this incredibly bad breadth going on for the market right now, and that is pretty unusual. And add to that that more than 50% of all the stocks in the S&P 500 are below the 50-day moving averages, then you can see that things are very bizarre at the moment. Stock market correction has been expected, of course, and it's not that there's anything brilliant about saying the market's going to correct. The market's correct on a regular basis. There's a normal rhythm in the market, and I'll show you that in Apple in a couple of moments. I think you're going to find fascinating. But the stock market's at all-time highs right now and has extended to what we call a right-hand translation in this cycle, where it moves further to the right and more up. But at the same time that that's going on, the transports had a 16% correction. The same time that was going on, the XLF fell 8.8%, and the XLI, the industrials, fell 6.8%. So you've had this underlying rotation and correction going on underneath the surface. Worldwide markets, equity markets, are correlated, and they correct normally in times that the US markets would correct. They actually corrected on time, and I'm going to show you a couple of those charts in a couple of moments, and you'll see what I mean. So the indexes, which have some of them have been correcting, a lot of that has been masked by what now has been in the rotation moving into the mega caps, the tech stocks. And Arby did some great analysis recently on the mega cap stocks that you may want to look at. So this is a period of kind of confusion, and I'm going to try to unconfuse it at the moment, make it a little bit clearer as I switch over and look at some charts other than the S&P 500, which I normally look at right now, and I'll bring that up too. But I really want you to get the idea of where we are right now and the stocks that have been masking this rotation or correction underneath. This is a little different or updated Apple chart right here. That's looking at the weekly cycle analysis in there. And you can see the rhythms in the market. These blue spikes in here, the timing spikes, they're stretched ovals is what they are. And they tell you where the actual low was in that dominant cycle right over here. This is the XLK right in here. So you can see that, how it aligns with the other tech stocks and Apple. And just to change things up a little bit, because those big yellow ovals tend to be kind of exaggerated in what they mean, I put in yellow arrows in here instead, so you can see where those corrective phases are, and they're not that exaggerated. They just give you an idea where the corrections are due. So you can see back over here, back in March of 20, where both cycles were coming down. You had that correction here in September of 20, here in March of 21, and look where we are right over here, which says that, well, while Apple is driving the indexes up, and don't forget, Apple's like 11% of the Nasdaq. As a matter of fact, when you put together all of the heavyweights and the top three heavyweights, Apple and Microsoft and Amazon, the three of them, they are 30% of the Nasdaq weighting. So this is like the entire market is when those three stocks are going up, and they are all moving up to all-time highs right now. So Apple is just now barely making it. You can see that little fib, bottom of that fib extension right over there. So what does that mean? It means while Apple is driving it up right over here, and you have this minor upside rising phase right over here in that cycle, that somewhere over here it's likely to come down. Now, when the stock was over here, we talked about there was a March target of 115 to 118. It came down right over here to 116, as you can see. Now, we put that in ahead of that, yes. Just like I did right over here. So the target right over here for late August to early September is right over here, which would take it down to somewhere between 135 and 138. So if that were to happen right over here, you know, that would be happening in the time of a market correction. So I just wanted you to see that Apple going up, it's kind of out of phase or in a longer cycle with the S&P 500. And that is giving you some sense that there's a reason why the Nasdaq and the tech stocks, these three stocks, and are really moving the indexes up while the rest of the indexes have really, a lot of them have deteriorated, like I'm talking about. Let's look at the XLK just so you can get an idea there. And switch over to the analysis on XLK right over here. And there you can see very similarly, it's looking like, well, that cycle is driving it up still in the XLK, and that is giving you a sense of the market being stronger than it really is. And if I look at the communication, which is more of the tech stocks, this one has Google in it and Facebook. As you can see right over here, you have a similar situation. The correction is due, but it hasn't happened yet. So you get the same thing. But when you look at the European stocks, and I'll give you a look at the FEZ right now, and note we have now put FEZ in our focus list. Look at the magnificence of these cycle patterns that you see right in there. Each of those, you know, yellow corrective zones brought the declines. These vertical lines are the cycle, actual cycle lows that you see in there right there. And one due right over here, as you could see, and it's a little, and it came right on that low. So this is important analysis. When you look at this, you can see that this is already corrected. This fell 7.7% in the window of time that we were looking for the S&Ps to correct, and where these other indexes have corrected. All of this is in line, but the US is being masked by these few stocks. And what this says to us is that when the stock market does fall, and you know we were looking for S&Ps down, you know, 10, 11% over 3 to 4 weeks, well, it might be very quick if this probably comes down a little bit more with it, but then they're all ready to move up again. So that tells you that, you know, if this all stays in line, the bull market will not be over, that the next rally will come, and that takes you out probably into Q4 before there's a top in this bull market that you're looking at. So you can, you know, really get a good idea when I look at that. I just want to look at a couple more charts in here that are supportive to what I'm talking about as far as Europe goes. Let's just look at the EWU. This is the UK, and you can see in here very much the same pattern in the EWU as I just showed you. Let's look at the EWG, which is Germany, and you can see in here the same thing. I mean, a low due or will come very shortly. And all of these are unbelievably strong patterns, which say that the bull market's not over. You get a completion of the correction, and then they are moving up again. So I think that was important to bring to you, that you could see that there's so many things that are correcting where they're supposed to be, but we can't see that in the indexes, which makes it extremely hard for people to trade because they're afraid to be long because they should be going down. And when they trade short, the indexes go up, so you can't get paid on the short side. And this is a very unusual rotation, so unusual that you actually can't see any market correcting where there are aspects of it that really are. So now I'm going to go back and I'm going to look at the S&P 500 weekly, so you can get some idea right in here about those correlations and how they affect the S&P 500 or will. And you can see that here's your S&P 500, which is held up just amazingly well. Should I change those ovals to those yellow arrows so they don't look so dramatic? I wonder about that. So this is, what we're expecting in here is a top, and we were wondering whether originally we thought the best it would do would get up to 4,300 to 4,325. It's gotten up to 4,392, and this way up here on that minus 78.6 to this area up here at the top of that major fib extension is 4,470 to 4,500. Can it get there before these few stocks that are holding it up actually correct? I doubt it, but I've been wrong on every one of these highs because no matter what, the market keeps going higher because of these heavyweights or mega caps in the index. So the S&P 500 should be beginning to go down. Here's the daily chart right over here. And you can see that, well, it just continues to move up, and through that last fib extension zone right there, and hits that weekly 61.8%. So a lot of strength. And if you look at where this low is due right over here, that takes you out to about August 5th. So this is only about 3 weeks out over there for what might be that big decline. Or if you look at the other mega stocks, they could decline out in that next cycle that you could barely see over there, which would really, in a frustrating way, extend things out. But that's exactly where we are right now. I just want to go back to the weekly chart right here. And this is, you can see what I mean, that this could really be the beginning of a market week because I had so much to show you. We talked about the this area right over here, that 15,000 area on the daily chart. It tags it exactly today and then gives you this kind of shooting star that you're looking at right there. So you got to wonder if that is the high in the Nasdaq when you look at that. And here's your Nasdaq weekly right over here with those same projections that the correction should come. And when you look at Apple, you see that it's in line with this and likely to encourage or nudge the markets into a correction. So that's everything I wanted to bring you in this very, very long introduction to this live event. What's next? I mean, are we going to just continue to have these invisible corrections that we're seeing right now? Well, the market's correct, but the indexes don't really, and we end up with this sideways movement that we are having a sideways correction rather than anything significant on the downside. Will we pull back and hit kind of major the highest of the correction points, like the 23%, and that'll give you a 6% decline maybe if that happens? Or is it going to be one of those big hard fast ones that are down like 10-11%, and then that correction comes in? If you want, you do the analysis. You can type it into the chat if you want to do that. But I'm curious to see what you say. I don't really have a good, I just stick to what the highest probabilities are, which that it's going to fall relatively hard because there are multiple cycle patterns nesting right now. But you can see the corrections are happening under the market and the indexes are not correcting yet. So I don't have a good answer for that. I just brought you everything that I see in that analysis. So that's it. That's my long introduction. I'm going to turn this over to Matt, and then we'll entertain questions on that later on.
All right. Thanks, Slim. Great analysis and instruction as usual. All right. I'm going to share my screen here. Okay. We should see a slide. RV, can you give me a heads up if you can see the slide?
Good
here?
to go,
Okay.
Matt. Good
All
to
right.
go.
Thank you. All right. Very good. So in this segment, we're going to briefly discuss the upcoming askSlim Level 4 membership change and price increases. These changes are scheduled to occur the week of July 26th. Most importantly, we're going to go over the key takeaways and make sure that we are communicating these changes in advance and how they may or may not affect you. So as Slim mentioned, really none of these changes are going to affect you, if you want to call it, in any kind of negative way in terms of services being lost or any price increases. Actually, there may be some significant benefits for some of you and an opportunity to upgrade to take advantage of locking in some of the current pricing that is available through some of the specials we're running. So we're going to be introducing a new level. It's going to be a level 4 plus. Okay. And what this means is that anyone who is currently a level 4 member will be automatically migrated over to this new level. So there's nothing different you're going to need to do, and you're not going to experience any pricing or service changes. So that level 4 plus is going to continue to support our personalized chart request service. And then we're going to have a standard level 4. And that one's going to continue to receive direct access to our custom charts, our weekly and daily toss chart grids, our proprietary indicators. However, that standard level 4 will no longer support personalized chart requests. But again, all of you that are currently level 4, and if you continue to maintain that level 4 status through a transition period, will automatically be upgraded to that level 4 plus, and any new benefits that would come with that level 4 plus as well. Okay. Next is the general membership pricing changes. These are absolutely necessary for us to continue to support the maintenance, enhancements, and expansion of our services and our team so that we can meet the needs of our members, the changing markets, provide the ultimate trade planning tools in terms of technology, possibly migrating to different charting applications and software packages so that we can service more of you and not be completely limited to, as an example, the thinkorswim platform. So those pricing increases will be happening. We're targeting the week of July 26th for these changes. All of you that are currently premium members, and that's what we have on the call today, as that transition occurs, you'll all be grandfathered in at your current pricing levels. Note that it is important to recognize that we are looking at adding some discounted annual pricing. So if we release that, all of our premium members would have a chance to have access to that as well. So if there is a price break, you would have a chance for that. So we're making sure that anyone who's currently premium will have really the best of all worlds as we make these important changes for us. If there are questions, you can reach out to me directly. If you are interested in upgrading, you can reach out to our team support email at team@askSlim.com, and we will provide you with the current specials. And those, just so you're aware, we have those 3-month trial specials, so they're one-time use, and then that then converts to our discounted quarterly rates, which you would then be locked in at, which are obviously going to be better than the new pricing that is going to come out. But we will keep you up to speed on any of the other changes, possibly with the annual pricing. And if that is better, you would have a chance for that as well. So if you do have any questions, you can take a few of those now, or you can write to me directly. But bottom line is there's no negative changes that you will experience as we make this transition. One other important note that I want to make sure is out there, that with the level 4 plus, because it has an aspect of such personalized experience, there is going to be a cap on that service in terms of the number of members that are going to be able to participate in that level. We are close to capacity on that now. We want to make sure that anyone who is currently not a level 4 member, so if you are 1, 2, or 3, and you've always thought about moving up to level 4, this is not doing this as a sales pitch, but just saying it like it is, that there's this cap coming, and we do have a little bit of room for really a handful or so more to join the level 4 top tier membership. We will then create a waiting list for that membership tier. As members decide to leave, then we would notify you that you can obviously join. So again, reach out to me if you have questions or any kind of concern at all. Happy to answer those. And if you have upgrades, reach out to me or team at askSlim. That's all I got.
Very good.
All right.
All right.
Good job,
So
man. Thanks.
I just want to encourage anybody out there who has been thinking of upgrading to make sure that you do that, because as we get here to the 3rd week of July, that opportunity is going to get closed. So please do write to Matt if you want to take advantage of those upgrade specials. All right.
If you want to grab it back, either RV or
I want to see if there's any questions that came in regarding
Sure.
that.
Yeah, no problem.
I don't really see any. I think it's pretty clear. So
Good.
good. I've noticed. I kind of want to talk about something that I see here going. That RV is having a chat with. I just want to grab the screen back here. That RV's been chatting back with another member in there regarding trade ideas. And the fact that there's been a period in here where a lot of the trade ideas have not gotten into the entry zones. And we will go through periods also where some of the trades are just, there'll be many that are really good trades. In fact, I think Harvey had a period where there was something like 13 good trades in almost in a row. And then we get into periods where the market gets tougher, things get a little crazy around the earnings time, and they don't go quite as well. And I think the real point that I want to make is that how many trades do we have totally since we've been doing this format, RV? Is it like 500 or?
With this format, let me check here.
But actually, it's over 500 in both formats. In this format,
Yeah, in this format, we have around 450.
oh,
447. Yeah.
Right. So the key is, of course, and when I think about option traders, they look at risk rewards. In other words, looking at a trade and saying that, it has let's say a 45% probability of profitability or something like that, or 50 or 60% probability of profitability. They're always trying to look at, how they can get an edge based on everything that they're looking at. Well, that's what we do in our trade ideas also. So when you look over these hundreds of them that we've done, the directional decisions on those are in the area of 70%. So some of those we will miss, but the direction was correct because we're cheating, because we have momentum indicators that tell us the highest probability of a direction that something will go in. Well, maybe that's not cheating. And for the ones that are executed, the number is well over 60%. Is that right, RV, or 62?
Yeah, it's 61.6 is the updated number.
Right. So
yeah.
that's almost 2 to 1. So if you're looking at option trading, well, basically option trading is a zero-sum game. No matter what numbers you put it on, it's 50-50. Imagine if you have this overlay of almost 2 to 1 or 3 to 2 at 60-40, then you really have a good advantage. So somebody that's coming in and using our trade ideas, you can get into a period where they're not doing so well, or we're not executing because the market's running away from what we think are the highest quality entry areas. And if you're a new trader or you're just starting to use those, you're going to say, what the hell, these things aren't working. And you really have to look at this over a much longer period of time to get this overlay, this advantage that's you really get by do them small, do a lot of them, and you'll get the idea of how you can benefit from using the trade ideas. And if you're not a level 3 or 4 member, then this is your chance to step up right now and get a good idea of how to use this great analysis. And RV teaches every day. It's amazing. He does a video on all of these. And even if the trade isn't executed, you're going to learn something because he really does a fantastic job at that. So I really wanted to give you kind of that speech around that, because I think it's so important when I saw that discussion going on. So for the member that brought that up, thanks for that. I think that was really important. All right, so now let's get into these requests over here. Ari, did you take a look at what the equity questions are in there?
Yeah, there are a couple of questions on GDX, CCJ.
Okay, I'll take some of I'll take some of the other questions first, and then we'll get to those.
Okay.
Steve says those yellow arrows are harder to read. Given the idea, maybe a paler yellow in those ovals, so it's not as jarring. That's a really good idea. So I think I'll make that change and see how that looks. Somebody else said that they really want the ovals to stay in there for the whole thought process. So that's really good. Nate says, I have a hard time believing there will be a correction until the FANG earnings at the end of the month. Maybe that is a possibility. Maybe it is possible that, we'll get some advanced earnings or some company that'll come out and say that they're not going to make earnings, and that will affect the whole group. I really don't want that to be what happens, but I'm totally out of control of it. It's out of my control. So it is possible that the market could extend further to the right side. That does happen, and I won't like it. Paul says, advice on possible strategies on how to play this. Wait for the top confirmed, then do out of the money puts. Okay, so there's two or three things in there. First of all, we never give advice, so I'm not going to give you any advice. If you wait completely for a top, under the conditions of a confirmation, you won't be able to get, when you get an extended market like we have with a very positive intermediate momentum conditions that you see on the weekly chart, you're never going to get the weekly to really give you any information of value until there's a huge break in the downside. So that means you could miss some of it. I had somebody write me about that exactly today, and I shared my answer with the rest of the team. And I think it's important to look at what your own risk tolerance is and do something very minimal as far as when you think it's appropriate for you and for the analysis to take a nibble when you think something is out there that's going to happen fairly soon. Some amount that, once it starts to go your way, it'll keep your eyes on it. It'll be on your radar, and then you can decide to add to it as the shorter term indicators give you the signal that it is actually correcting. Even the 2 hour will be the first one to give you that kind of information of the ones that we look at. The last part of this, confirm, then do out of the money puts. I never recommend out of the money puts as the strategy that you use. I don't have a problem with doing a few of those if you have some in the monies already, or you have something that's going to react to the market with a high delta. I always have options that are in the monies to make my trades, and then I might add some out of the monies when it looks really good. But out of the monies are always going to be the worst trade you can make in options. The risk rewards on them are horrible. Those are the ones that have the highest implied volatilities on them. If anybody says that the reason you make money being short options is because implied volatilities are high, and that means that you're going to make money as they decay, it's in the out of the monies that occurs. The theory is, and I get this from my tasty trade days, is that on average options are overpriced by 3 to 4%. That's a ridiculously small money trying to capture in that. And if they're out of the money on average 3 to 4%, if they're overpriced on average 3 to 4%, then the out of the monies are probably overpriced by 8% or 10%. So you're really putting yourself into a negative condition buying out of the monies. I never ever say that's the right strategy to do. It's just not. Do an in-out spread if you want to get started on that, and then when it really starts to go your way, then nibble on maybe some out of the monies. But that should not be your whole play in there. So I hope that was that really makes some sense. What do we have in here? We have soybeans, crude, Bitcoin. Okay, so let's jump into some of those right now. So let's get into the Bitcoin, /BTC. So here's Bitcoin right over here. Interesting. Now here's those yellow ovals, right? So the yellow ovals, the call for that spring summer crypto crash that you see right over here was made way back over here. It's the amount of the rally that we had was beyond what I expected it to be. And this is another one of those cases where a market gets overdone on the upside and finally runs out of fuel. They get in the stratosphere and there's no air to breathe. So they end up just collapsing on their own weight. There's no more fuel to hold it up. And then when the momentum turned negative over here, and see, this is what I was talking about when looking at the stock market. By the time this turned down, went from 65,000 here to 47,000. So the intermediate momentum turning negative is not gonna. You're not gonna. A lot's going to happen before you really get a sense on that. Then when you get the rebounds back is when you get some of the better trades because the momentum is negative. So the expectation was that it was going to move down sharply and lose 33 to 60%. It lost 57%. And now we're in this kind of flagging area right over here. I don't know whether this is the low or whether there's one more down move coming here. And if it does, it'll take out that 28.6, maybe get down over here to in the 27s right there on the way down. And then we're going to get into another area. This is I think I might have an updated one right here. And there's the updated one. Okay, so now you see what it looks like after I update it and put the next cycle in there. So it shows you that the expectation is that it's going to come down and test those levels. The supports are down as low as about 26,000 there, and then get into another rally period. And I actually think that this period right over here is going to be a hook, because everybody's going to think, okay, the next hyperbolic move is coming and it'll get up here into the low 4,000s. And then the next move takes you down over here, maybe under 15,000 or worse. So once you get a negatively configured cycle like you have right over here, the probabilities are better than 70% that the next cycle will be negatively configured also. That means that you get the rally and it comes down and takes out these lows. So to me, the highest probability is that that will be a hook. Now, you know, if you want to be 100% agnostic and be purely a trader and not be like me, somebody that thinks cryptocurrencies need to go through an 80 or 90% washout of everyone that's out there in all of the altcoins, there's about maybe 7,000 of them right now, then you would think that it's really going much lower. Look at this now. Look at the slim ribbon PO on the bottom. This thing is so phenomenally good, where you had all of those good positive signals in here when it was going up. And now you have the likelihood, because I just told you that the intermediate looks like it's bottoming, that this has got maybe another week to go, comes down and tests those lows, and then you get into another rally. So you'll have the daily moving up and the weekly moving up, and we don't know if a base is being built in here or this is the last drop in the intermediate phase. But in the meantime, you could see the slim ribbon PO giving you the same messages it gave you back over here when it was starting to collapse, where it made that big head and shoulders top right there. So this really looks like it's setting up for another last move on the downside of some consequence, and then it will be tradable on the long side. But you got to be careful, because what if it extends down further and longer than we think? So you can see Bitcoin right there. Our estimation is that it's going to make a low soon, and then it's going to get a pretty good rebound from the high 2000s, high 20,000s, up into the low 40,000s. That's a very good potential uptick in there that will, I think, hook all of those. I can't tell you how many on Twitter, how many crypto hawkers there are on there. I see coming by all of the time. Crypto hawkers, that's what they are. It's like some snake oil guy that's coming down the road in a cart in the 1800s of the cure-all that's going to make everybody rich. So that's what I think is a lot of trouble coming out with a possible long side trade coming up here. I'm sure there's some of you out there that do not agree with me, and you think that cryptocurrencies are the new gold. You know, they're the next one. They're going to be the currency that takes over all the fiat currencies out there. Good try. Now we will look at soybeans. And here's the soybean market. We can look at the side by side right in here. So let's do this practice thing at a glance. Everybody glance at these two charts. And when you do, the cyclical patterns immediately tell you, and the momentum conditions, the highest probabilities of what are likely to happen. It doesn't mean it's right. Maybe 1 out of 3 times it won't be, but you can get the highest probability. Looking at this is suggestive of the fact that there is one more dip coming, probably 1 to 2 weeks long, and test those lows and then get into another rally period. These ovals, by the way, are out of place. The reason for that you see right there is because of the roll. So let me just grab this and put it where it belongs, here and here and here. So the roll came and it messed that up. That means I have to probably redo those fib confluences right there. So I'll take a look at whether or not that needs some updating right there. But it looks, when you look at this, it looks like what's coming in here is another move to the downside and then a rebound. Once we get the anchor point right in here, which is somewhere around that major 50, probably, then we will have the, with using swing high, swing low analysis, what the highest probability rebounding area is. But now remember, when you have a negatively configured cycle, this was a slight left-hand translation, the high made in the target zone, momentum turns negative, and it says down. It goes down, the slim ribbon PO is telling you it's still negative momentum, and that is suggestive of the fact, because this is a negatively configured cycle, that it will fail in the determined resistance somewhere in this area once it begins to move up. Then you can do your targeting. Once you have that, where will the rebound go to? And is that, for longer term swing traders, position traders, going to give you a short entry over here for the next move down? Because the highest probability is that when it fails, it will then move down to a low lower than that low, somewhere in this window of time right in here. As I look at the, we'll just look at the window, we look at things in price and time and in ranges of that. So there's your window right there in price and time of the next low that we're looking at. So you can look at the projections, you can look at the resistance zones. Once we have that anchor point, then you'll be able to project out as we do using this style of analysis. So that is a look at the soybean market, and I hope that was extremely informative to you too. Aaron asked, we got some hands going up. Great. Aaron asked, are you still projecting a low in both the S&P 500 and the Nasdaq at the end of August, or is it looking like the middle of August at this point? You know, it still, to me, looks like the end of August, but based on what we saw in, looking at the charts of the heavyweights, the mega caps, and those indexes, the XLK, XLC, and looking at Microsoft and some of the other ones, they all project out to late August. So maybe this whole thing is going to go longer than I had originally projected. Originally, I very, very early projected that the peak would come around beginning of June. Then as it extended, we had to move that out to where we were looking for the peak to be late June to early July. And now here we are, middle of July, and we still don't have a peak that we can recognize. So the later that gets, the more it gets pushed out, the more it can get pushed out. So yes, it could possibly be going out to late August till the end of that pullback. It would peak sooner, but every one of the cycles that we look at that has the shape that we're talking about right now had only 3 to 4 week declines. There was something like 13 to 21 days on the downside in these corrective zones. You can see how short those are. Those are all 3 to 4 weeks on the downside. So I expect that it will be 3 to 4 weeks on the downside, and that will be the most that you can get. Crude oil forecast right in here, /CL. Of course, I will redo these and update them a little bit for Future Speak tomorrow. And here you can see the corrective period that we're getting into, the period of greatest downside risk. This is light crude market from my year-end analysis is going to be shockingly bad, because the levels that we're looking for a peak were much, much lower than this. Actually, no way did we anticipate it was going to get up into the mid 70s in here. And now you can see it still looks like there is some reasonable downside risk where you see the 2 cycles nested in there. Look at these last ones right in here. You see where the 2 cycles nest right in here. This decline right here was about 2.5 to 3 months long, and that was from 76 down over here to 42. So it was a huge decline in that yellow oval period. This one right over here, of course, we don't even know how deep it went, because this took you down minus $40. We don't even know where the real numbers were, starting at 65. It was $100 decline because it went negative in there. And it's very reasonable to expect this one to go from 75 to 65. That's all we're projecting in there. I mean, it's really a very minor decline in that area where the greatest decline should be. You have the force to the downside from two cycles that are essentially reflecting money flow. So you have longer holders and intermediate holders all in a place where they could sell at one time, just like you saw right over there, just like you see right over there. How many do I have to go back for you to see where those come in? This is years going by that we look like we're getting into the period of greatest downside risk. So that says to me, the risk rewards are pretty bad for the long side right now, but maybe in 2 months' time, they're going to be actually good for the long side. So what trades do you look for looking at this? Well, you're pretty neutral at this time because it's getting late. But once you start to get it turning over on the daily chart and you start to get red on the slim ribbon PO or in the slim ribbon, you will know something is going on. Or when you break below, this actually rolls. So this low is right over here. When you get below that cycle right there, you will know that there is some trouble. But look at the slim ribbon PO on the bottom. In every corrective zone, it only goes to blue. There's no red on here. I mean, it's just amazing the power of these indicators in here. And right now, another positive signal at the bottom of this cycle. So you get an idea that the light crude market, while there is a high potential for a top in here, you're certainly not going to be looking at a big shorting opportunity yet, because the market is saying not yet. And you will miss the top. I promise you, you're going to miss the top. But so what? Because if you were trying to catch the top all the way up here, you got creamed. So you might as well wait for a decline and then some rebound where you actually get a signal that makes sense. And then you will actually stay out of trouble by doing that. Katie's asking, Slim, do you have any videos in the archive regarding option strategies that are more appropriate in combination with cycle and momentum analysis? I actually just want to say no to that. I don't think I've done anything exclusive in that area. Now, in the cycle analysis workshop, I have a module in there that talks about cycle analysis and option trading. And that's probably as close to I have gotten to that. Truth be told, that, we are hopefully going to really expand our option coverage. And when we do that, we're going to be looking at, bringing more educational things out for options. So I think that will be, that'll be the time that we do that. Sandy is asking for the VIX, VIX. Here's your VIX, and the VIX pattern on the weekly, I really been in denial about that because it really has been suggestive of the fact that VIX would stay low out over here into sometime into the middle of August. Looking, and you can see the downward slope in that VIX pattern and that in the major harmonic family there. So I've really been in denial about that because I didn't want to believe that the cycle could expand out that far before you got a big upside pop that's due somewhere over here. So, if the stock market peaks earlier in here and you get a big upward move right there, it's likely going to come down again of implied volatility before you get any upside move that can really hold. So this is just continues to be suggestive that implied volatilities probably will not. Where is my daily in here? There it is. Here you had a period where it did bottom, as you can see right over there. It was only a few days late, and then started to move up again. Now this is kind of looking like maybe another couple of days, and then you're going to try to get another pop on the upside in implied volatilities. Of course, that would be in alignment with the Nasdaq finally starting to give up some of these insane upside moves that we're having. So it looks to me like you could get some modest upside in implied volatilities, but I don't really see anything right now that looks like it's they're going to explode on the upside. Ray is asking for TLT, and we're running out of questions, so we might be able to close this early today. Maybe not. Arby's going to go into some depth. Here is TLT, and following patterns exquisitely. As you can see, the rising phase right in here, and that's likely to continue maybe a little bit here, get a modest correction, and then come back up over here. Right now we're projecting up to 152.5, right up over there, and this bottom came in here beautifully, timing wise. The daily chart right over here is showing you that it's come down into the support area. It looks to me like for now we've seen the high in the or the low in yields or the high in the bond market based on this pattern right in here. My guess is that this period right here, which shows you that correction where this nest is right here, is going to be this corrective period right over here. They're going to correlate together right there. And then when that's over, you get the next surge up to the upside. It doesn't really give you much short side in here, in my opinion. Maybe you can get down over here to 143 potentially. This right over here is 145. This is 144.36. So maybe down there to the 143, it looks like a worst case, but you could see we have it projected to 145.52 right there, which is basically the 50% level right over here on the minor cycle. So, you know, probably a lot of sideways chopping here before it then begins to move to the upside again in TLT. Well, that takes care of that for Ray. I'll do gold and silver in a moment. Somebody asked for Tesla. No, I did not do Tesla yet. Rashmi, your question about silver says, is there a short squeeze coming? First of all, I don't know how I would know that. Second of all, the likelihood of a big move up in the silver market right now is small. Let's just take a quick look at that as we look at /SI. I'm really looking for gold and silver to be in a choppy time frame right in here. We'll look at gold, look at both. Silver is in a the daily complex structure here is negative. I mean, it really looks to me in bad shape. You could see the momentum is negative here on the slim ribbon PO. That signal was nice, and we continue to move to the downside, the slim ribbon moving down. And this really points to a time frame out over here into around the end of the first week of August. That's the same thing for this cycle right over here. So again, at a glance, when you look at this, it says now is not the time to be considering the long side. If anything, it's the time to be considering for traders the short side. And then when you get out over here into this mid-August period, there's a better potential for an upside move in this being a pretty nice looking positive triangular shape. So we're getting into a period where there can be an upside move in here. But short squeeze, I have no idea of that. I'll leave that to the Redditors because that's not really my area of expertise. I just want to be long when they look like they can go up. I want to be short when they look like they can go down. And the smarter guys will take those kind of short squeeze type opinions. You know, those real intelligent guys that are on Reddit. All right, so Arby, I'm going to turn this over to you. How's that? You can do the things that they've been asking you for, and I'll try to clean it up after that.
Sounds good, Slim.
Okay.
All right, let's take a look. So we had Jeremy, who was very patient, waiting for the analysis on CCJ. Let's open that up here. Let me share my screen. I had Newmont up. Let's pull up CCJ. So for CCJ, if we open up the weekly chart, we have URA here in green, okay? And then we have the CCJ cycles in black. And you can see that we had this failure here versus this 2142 level, big failure, I mean, massive. And then that really formed the high likely. And then we would look for a pullback down into the late fall time period here. So you can see really what this looks like is there is this low due right around here, right? So we may have already had that low right there. You can see that little bit of a pop and then an early failure. So this is just a pretty bad pattern here and really looking like lower prices are coming here in CCJ. If we look at the daily chart, I haven't updated this in a little bit, but it's still holding up fairly well here. We have a low due here. So what we're looking for is if I use the fib tool, you can use our swing highs to swing lows. We don't have a low yet, but let's just say this is the low, which it probably isn't, but let's just say that it is. We can use our anchors, okay? We look for a rally back into this 1930 to around 2030 zone, and then look for this to roll back down on the downside and then move something like that. Obviously, we do have earnings coming up, looks like around the end of the month. So just keep that on the radar, but it does look overall quite negative given this large failure that we see here on the weekly chart. If we look at the next one, see yesterday for 4 symbols, I'll just pick 2 because we had GDX here. So you can see for GDX also, we were looking for this to form this low here, right? And then get another pop up. Now, we had that sadly fail and we have moved sharply lower. Now, given this sharp move on the downside, we would just look for a little bit of a move like that off of that low to then fail and then roll back down one more time into that low timing, which is due around 10.4-ish or so. So that's really the picture here in GDX. Watch for any little move up that will likely fail and then rotate back to the downside. On the daily chart here, you can see we had a low due. We're getting this little bit of a rally. This is likely going to fail and then move back down on the downside. If we use our fib tool, you can see I use this lower high right here. So let's use that lower high. I'll show you the fib tool and we can show the levels. So that's around 35.5 to around 36.80. That's the zone where we would look for a failure on the downside here in GDX. And you can see any little move up gets hit. So it's not acting well at the moment. Let's see what else we got here. We got, let's see, Tesla looks like. Let's open up Tesla. So Tesla, you can see it formed a low back in mid-May right here. And we got a little bit of a pop back on the upside. Now we're looking at this as one more flag to get one more test down into this next low timing. The low is due really in the next month to month and a half or so, and then we will look for another push back up. But overall, this is not a great pattern here in Tesla. If we look at the daily chart, you can see we have fairly clear cycles here, right? You can see the rising phase, sell off, the rally, the sell off, very, very clear, right? And then you can see the pullback here. We got into this rising phase here and really looking for this to fail and then make an early high and then pull back. Obviously, we do have earnings, so anything can happen on earnings. Earnings are due right around the end of the month. So that's really the look at Tesla, but we are looking for a high to form and for this to roll back down given where we are in our weekly cycle, which is very late and due to have a bit of a pullback in this time window here. So we'll have to see what happens there. I don't have any work on EMTY. I'm not sure what that one is. Looks like it's a retail stock.
You have Newmont. Question is, will it look
Yeah.
like the same as gold? Gold looked like it was going to be in trouble for, another month or so.
Yeah. Newmont's really the same overall picture. Looks like it's got risk for the next, looks like possibly the next couple of months out into around the 10-4 timeframe too. So we'll just watch for this flag to form here also, and then watch for one more test down. Overall, a fairly risky pattern still here in Newmont, not one that we would look to the long side in for any of our trade ideas. You can see on the daily chart, same kind of picture here. We have basically looked at this old low here, right? So we would watch for this to fail in this 65.60 up to 68 zone, and then for this to move back down to the downside. We do have earnings here, as we do in many names. The next earnings is looks like 7:22 in the pre-market. So just keep that on the radar too.
Yeah, Mars was asking about the retail ETF.
Yeah, he was asking about a different product though.
Yeah, which we don't have, but what about just put up the
Yeah, we can just pull up
XRT?
XRT. Yeah, pull up XRT. XRT, what we see here is that we are moving up here. We can look at this old high, or the old high off that GameStop spike, thanks to Wall Street Bets crew, was 99.24 here in the XRT. GameStop ended up being a large share of this, which is totally messed up because that's not how this is meant to be. Each of these holdings are actually meant to be very, very small, and GameStop was a huge share of this holding, which is why we see this massive move on the upside and then failure. So creating a bit of noise here, but the high is 99.24, looking for that to get pushed through and looking for a move to this 101 to 105 zone here. So still looking fairly decent. Daily chart, really just kind of doing a whole lot of nothing here. You can see just basically going sideways here, but you can see that each of these lows are higher. So we would still look for one more higher low and one more higher high here in this overall fairly decent pattern in XRT. Yeah.
Looks good.
Yeah.
Okay, I think I'll take over the rest here. We're going to shut the questions off.
Sounds good.
And Tobias is asking, will there be a big picture analysis in the next weeks with this strong market? Will this bull market probably enter into mid to end 22? I actually think the bull market's still going to end this year, honestly. I think it's later. I thought it would be in the no later than July, but now the way the patterns are forming up, it could be actually in the fourth quarter. I think that into 22, and if you look at my analysis on quarterly, on the 28 quarter charts that I showed in the past, that goes out into 2023. So I actually would be shocked if the bull market went out into 2022 at all, to tell you the truth. I think that we'll have a bear market into that time frame, but I'm kind of alone in when it comes to that. And go back and look at my bigger pictures, and you will see that. Steve asks, I saw you pull the RV. I saw you pull off the transports. Did you pull that question down?
Yeah. So it's actually due to form a low soon. The transports, you can see it's actually pulled back from like over 280 to sub 250. So it's already had a pretty decent sell-off, and we're looking for actually a bottom to form in some.
It has actually. I was going to show that chart, and I saw the question disappear. So. Let me just do that anyway.
Sure, go ahead.
If I can remember the symbol. $DJT. There we go. So I just think this is really good looking right here when you look at it. This is, you look at the vertical lines and look at how that lines up with those harmonics in the bottom. It's just absolutely incredible. And that low, as you can see, due right over there. And now the projection that if it hasn't bottomed, it's likely going to bottom pretty soon. So this is, there's a good chance, you see, I have it not making new highs, which is probably pessimistic in here. There's a pretty good chance that it will actually get up and equal those highs. So bottom in the Dow Jones Transportation Average is actually due. Travis, you are asking for the HG, which is copper. You said the daily. Well, here is the weekly, and you can see looking at that, it looks like a bear flag. When you look at the daily, it looks like it's failing underneath the resistance, or at the resistance, just moving sideways in here with negative momentum, as you can see. So the highest probability when I look at that is that it will decline for about a week and then make an important bottom. It should challenge that last low right over there, somewhere around that $4 to 406 area, and then set a bottom that you see in there. But now what's important here for the bigger analysis is that this gave up already more than 78.6% right there. What that says to me is that the next rally, when it comes, will likely fail in this area. And you can see that there is actually a declining or corrective phase out over here that should get it even lower than these levels. So you're asking for the short term because you said daily, and the short term looks like one more move to the downside, and then it will be moving back likely to the upside. The next question is from Steve. He says, have you done any analysis on the new small exchange futures products? We do all of our analysis on the bigger products. So whatever overlap there is where we're going to do the analysis. You can always convert it over pretty easily onto your own charts. And Big Bazooka says, askSlim, does it matter that the S&P 500 is exactly now 100% from the COVID lows? It matters to me because I've tried to short it and lost. So I don't know that that 100% is ever going to mean anything. It would be a very pretty place for it to stop, but I can't tell if that actually is going to happen. I hope that we have answered all of your questions and that you learned a ton from us. And I was going to give this whole thing about long cycles, short cycles, the power of the individual holders and what the length of those are, but I'm going to save that for another video. So I think we'll cover that because I think it's too broad of a conversation. For those of you that want to contact us because you've got issues, team at askSlim.com, that's for membership or website issues. You write to Matt if you want to talk about the Slimulator Momentum Tracker, SAR, ETF report, or chart streams. Harvey, you sent to him trade ideas, Slimulator rankings, chart analysis, and requests. For those of you that will now be in the new level 4+ because you're going to get upgraded, make sure that you send those questions through the form when you ask for custom chart request. I take a lot of questions from level 3 and 4 members on trading and analytical questions and on the cycle workshop for those of you that have taken that. The cycle workshop, by the way, is going up in price also. That's coming in a little while, and we're going to be offering one more special before that happens. So make sure you do take advantage of that also. That's it, guys. Great job. This was actually fun.
Absolutely. Tremendously informative. Great engagement with the members.
Yeah, great.
Yep, absolutely.
Harvey?
Thanks so much, guys. Appreciate it.
Yep, great work. All right, we'll see you guys next time. askSlim Live.